I understand Verdence Capital Advisors does have some exposure to Tesla, and more broadly, have you felt that the market has priced in some of the worst here for a business like Tesla, for some of the less than magnificent Seven?
I think from broadly speaking, I still think there's some downside, specifically because some of these stocks, Tesla included, have been really driven by momentum. It's been a pretty big decline that we've seen in Tesla, but the clarity's not there. From a broadly speaking, from the Magnificent Seven, this earnings season they have a lot to prove. Valuations are very elevated, and if we don't see this come through from an earnings perspective, I think there's more downside and a little bit more of a valuation correction.
What I love about your notes, your analysis, Megan, is just how deep you go and sort of ultimately how powerful and encompassing those Magnificent Seven players have been. I read in your note that, in fact, 5 of the Magnificent Seven companies, so you're talking Nvidia, Amazon, Meta, Alphabet, and Microsoft, have expected to be the top 5 contributors to year-on-year earnings growth for the S&P. Basically, if they don't give us what we need, earnings are more broadly going to fall across the rest of the S&P.
All right, they'll definitely be, I think, a lot weaker than the anticipation right now, and the anticipation is only for about 0.5% year-over-year earnings growth. So there's a lot riding on these Magnificent Seven. I think that's also why you're seeing the markets, they're kind of moving, they're up a little bit today, but moving sideways. They're going to wait for they're waiting for earnings. They're also waiting from an economic standpoint, the PCE that we get later this week, personal income and spending, and then that first read on GDP for the first quarter.
Megan, good morning. It's Ed in San Francisco. There's a UBS note this morning doing the rounds. A lot of people are talking about it, and they've cut their view on the big six to neutral from overweight. But they're basically saying tough comps this quarter. And I think that they're kind of suggesting that if you go away from the big six or Mag 7, whatever you want to call it, there is some other technology out there. There are other corners of the market to play in. Do you share that thesis?
Yes, absolutely. These stocks have had a great run, but they have to now, as we mentioned, the valuations are very high, and people are looking for outside of that to make money. Not just in the large cap space, but I think if you look in the small and mid cap space, I think there's a little bit more value there. They haven't participated in this rally in the large cap space, and if you look from a long-term perspective, from a valuation standpoint, they're historically cheap versus the S&P 500. They're in the same boat though from an earnings perspective, that there's a lot of uncertainty around earnings in the next couple quarters. But if you can withstand that volatility and look longer term, these may be some opportunities in the market.
Megan, there is quite a lot riding on earnings, I feel like, this season. And lots of people say, well, if earnings don't deliver for us, particularly on the big six, Mag 7, then tech will fall away and the market will go with it. We like drama on the show, OK? But realistically, how worried are you about the stakes in the coming weeks?
I'm quite worried. We had a little bit more than a 5% correction in the market over the past couple weeks. That was not enough, in my opinion, to really warrant to look at these elevated valuations, and then also take all of these mounting risks that we have from an economics standpoint, from a geopolitical standpoint, from a Federal Reserve standpoint. I think there still is a little bit too much optimism about what the Federal Reserve can do, and our bigger risk here is, what is inflation going to do? Are we really in the midst of a reignition, I guess you could say, of inflation? If that's the case, these stocks and these earnings expectations and these valuations are just not sustainable.